Hello everybody, my name is Kate Olaf and welcome to my channel. In this video, I'm going to answer a very important question that everybody watching probably wants me to answer. Now, by the title of the video, you probably already know what I'm talking about. But if you were like most of the viewers and you just clicked on the video because you saw the beautiful thumbnail that rests before your eyes, the question that I'm going to be answering is the real estate market going to crash in 2021? Now, this seems to be a really big trend going on right now. Most of the financial YouTubers that I watch have all put out at least one video going over this topic. So I wanted to take it upon myself to make a video to help you solidify your position when it comes to this idea. Now, I hope you hear me when I say this. I'm not some sort of psychic that can tell the future and be certain of anything that's going to happen. But what I will be going over in this video is backed by research, so take it how you want. First off, let's start with some basic facts. If you didn't already know, the current real estate market is at a historic low when it comes to inventory. Inventory is actually down 22% compared to last year. To simplify, this means that if you're looking for a home right now, it may be very difficult. With low supply on the market, this means that housing prices are starting to climb. It's kind of like what's happening with gas prices at the moment. Because there is a shortage, gas stations need to raise their prices to account for the price that they have to pay to get the gas. It's your basic supply and demand formula. So with housing prices going up, low sustainable interest rates, and low inventory on the market, people are starting to get a whiff of something that smells kind of like 2008. And so there's a lot of talk that 2021 is going to be the year that another real estate crash is going to happen. But to that, I'd say not so fast. I'd like to believe that we learned something from 2008 and we wouldn't make the same mistakes that we had made. And luckily, it seems as though we did learn, which I'll go over in a minute. You have to remember, back in 2008, everybody was getting approved for loans. In today's market, that's not so much the case. Remember how I said it seemed as though we had learned 4 seconds ago? Well, say hello to a little something called the CFPB, or the Consumer Financial Protection Bureau. The purpose of the CFPB is pretty much to do exactly what it sounds like it was meant to do. Their job is to protect consumers, us, in the financial marketplace. So if you're anything like me, you're probably asking, well, how do they even do this? They have put laws in place which makes lenders search for stricter income, asset, and credit checks when approving people for loans. They're pretty much the police for lending institutions. They enforce their laws. And if you're asking, well, why don't lenders just break these laws so they can make some more money? Well, if you are a lender who knowingly breaks these laws, the CFPB could charge you up to $1 million a day. Yes, that's 1 million with an M, a day. So just know overall that the CFPB is in charge of basically not letting another 2008 crash happen. One other thing that's very different today than back in 2008 is that we have many forbearance programs in place. Especially due to COVID, these programs have allowed homeowners as well as even renters to postpone their monthly payments. Many landlords and institutions are trying to keep options open for their tenants and homeowners in hopes that they don't have to suffer any penalties. According to rismedia.com, as of March 2021, 2.6 million homeowners' mortgages were in forbearance plans. Now, by no means am I saying this is a particularly good thing, but it does help the case of postponing a market crash anytime soon. And the last factor that we must consider is home equity. Now, what is home equity? According to rismedia.com, equity is the difference between the current market value of your home and the amount of money that you owe on your home. To simplify, it's the portion of your home's value that you actually own. For instance, say back in 2008, I bought a foreclosed home for $100,000, and I've held that home until today, and it's now worth $250,000. You may be thinking, well, then I'd have $150,000 in equity. But you'd be wrong. You have to factor in the amount of money that you still owe on the house. So if you had been paying your mortgage down since 2008, let's say you owe $50,000 on the house, you would then have $200,000 in equity on that house. Equity matters because if home prices start to fall, homeowners will have a buffer before they have to default on their loan. A default on a loan is simply the failure to repay the loan. So if you are a homeowner, figure out roughly what the equity you have in your property is. This is always a good figure to know, especially based on what we're talking about in this video. So with all that being said, is the real estate market going to crash in 2021? Honestly, Who knows? The reality is that nobody really knows. Nobody can know what's really going to happen in the future. And that goes for your life and the life of the economy. But we can look at history and data that we have now. And so with that being said, I would say it's unlikely for us to see a real estate crash like 2008. We may see a dip in home prices and a rise in interest rates. Who knows? All I can say is the time is now for you to act on what you want to do. If you're waiting to buy a house or sell your house because you want to time the market, stop. The longer you hold off doing anything, the longer nothing changes for you. So do as much research as you can before pulling the plug on anything, but always remember that anything can happen. So that's going to do it for this video. Make sure to like, comment, and subscribe to the channel if you enjoyed the content. Remember to tap the notification bell when you subscribe, that way you don't miss out on any of my new videos. And as always, I'm Kate Olaf, and I'll see you in the next one.